This is not a crypto startup investing in Wall Street. This is Wall Street investing in crypto. The Intercontinental Exchange, the parent company of the New York Stock Exchange, is reportedly in talks to invest in MoonPay, one of the largest crypto payments companies in the world. And the valuation being discussed here? $5 billion. This, guys, is a massive signal, and almost nobody is talking about what it really means to the overall ecosystem. So according to Bloomberg, Intercontinental Exchange, or ICE, as it's commonly referred to, is in discussions to participate in MoonPay's latest funding round. MoonPay is reportedly raising capital at a $5 billion valuation. For some context here, ICE is not some speculative investor. This, ICE, Intercontinental Exchange, is the company that owns the New York Stock Exchange, major derivatives exchanges, clearing and settlement infrastructure used by global finance. These guys don't chase hype. They invest in real infrastructure. And MoonPay, they believe, is that infrastructure. So a little background. What is MoonPay? Not a lot of people have heard about it really. There's not a lot of hype around it. It isn't an exchange. It is a payments on-ramp. So what does that allow MoonPay to do? Buy crypto with debit cards, integrate crypto payments into apps, convert fiat into digital assets seamlessly. They power crypto purchases for wallets, NFT platforms, and Web3 apps, along with traditional fintech companies entering into crypto. So in simple terms, if crypto is becoming mainstream, MoonPay is one of the toll roads. So why would ICE care about this company? Here's the important part, and what the big guys already understand but aren't saying out loud. So ICE, they currently are involved in trading, clearing, settlement, compliance, and market infrastructure. But what they don't control yet is crypto payments and access. So this investment into MoonPay will solve fiat to crypto rails, regulatory friction, global onboarding. This isn't about speculation. It is about owning the front door to digital finance. And we're going to see this moving forward, guys. We are going to see the big boys that maybe didn't move fast enough in the beginning, and they didn't think they had to. They let it play out, and then when the time comes, they just acquire. They acquire the companies that rose to the top. So ICE, they wouldn't invest in something unless they believe it is going to be permanent. So the macro signal, the 30,000 foot view, what does this all mean? What have we seen? We've seen BlackRock push into Bitcoin ETFs. Fidelity has expanded into crypto custody. Franklin Templeton is tokenizing assets and also in the crypto ETF game. And now, the New York Stock Exchange's parent company is circling crypto payments. This isn't retail hype. This isn't the meme coin boom. This is financial plumbing being rebuilt and scooped up to be integrated into the global financial system. So guys, crypto, it's no longer a risk asset experiment. It's not an experiment anymore. It is becoming real settlement technology. And this investment by ICE into MoonPay just it puts the seal of approval on it one more, right? It is saying like this is real. You don't invest in something with the $5 billion valuation to speculate, especially if you run the New York Stock Exchange. So Wall Street, they need to get exposure to this before the rails are fully built and they are left out of the market. So for all the overall scheme of things in crypto, this tells us three important things. Crypto payments are going to be the next battleground. Regulated access matters more than speculation now. And institutions are investing quietly, not tweeting about it everywhere, which is why we need to stay up on this and do our research and watch where things are going, what companies are getting bought up, what networks they run on. That is going to help us as little guys choose what cryptocurrencies we invest in. So MoonPay at a $5 billion valuation with ICE interest confirms one thing. Crypto isn't being adopted loudly. It's being adopted strategically. And by the time retail notices, all the big boys will already have owned all the infrastructure. So this isn't about MoonPay alone. Yes, this story, MoonPay was the central figure in this story, right? But this is about a bigger narrative that is going to be evolving in 26 and 27. It is coming down to who controls access into crypto, payments, and settlement, and trust. Are we going to trust the next financial system? And now the company that's behind the New York Stock Exchange wants a piece of that future. So let me know your thoughts below. Is this bullish for crypto, or is Wall Street trying to own it all before crypto owns them?